Two nuclear threats, just aligned, publicly. For the first time, Kim Jong Un didn't whisper this behind closed doors. He said it out loud to the entire world. We are with Iran. And somewhere in Washington, a room full of generals went very quiet, because this isn't just a statement. This is a signal, the kind that doesn't come unless something much bigger is already in motion. And what's coming next might change everything you thought you knew about how this conflict ends. Welcome to Currency Archive. Now, before we go any further, I want to ask you something, and I mean this sincerely. If you've been watching this channel for a while, you know we don't do clickbait here. Think of it like your old neighbor, the wise one, over 50, who's seen enough of the world to know when something real is happening. That neighbor would tell you, Beta, subscribe, because what's coming, you don't want to miss the next chapter. So if you haven't subscribed yet, hit that button right now and tell me in the comments, where in the world are you watching this from today? Because trust me, where you're sitting right now might matter more than you think. On a day that passed quietly through most news cycles, Kim Jong Un said something that did not pass quietly through the offices of Western intelligence agencies. The North Korean leader publicly signaled his support for Iran. Not in a vague, diplomatic way, not in the careful language that politicians use when they want to say something without really saying it. He said it clearly. Pyongyang was prepared to stand with Tehran if the conflict expanded. For most people scrolling through their phones that morning, it was just another headline, another statement from a leader known for bold declarations. But for the analysts sitting in secure briefing rooms in Washington, London, and Brussels, it was something else entirely. It was a signal. And signals like this one do not arrive without meaning. To understand why this moment matters, one must first understand the relationship that produced it. North Korea and Iran are not new partners. They have been quietly building their connection for decades. Long before the world was paying attention, these two nations found common ground. Not through shared culture or geography, but through shared pressure. Both faced crippling international sanctions. Both operated outside the systems that govern most of the world's trade and finance. And both understood that survival, in their particular circumstances, required unconventional cooperation. Over the years, that cooperation took very specific forms. Missile technology moved between the two countries, through channels that Western monitoring systems struggled to track. Defense expertise was exchanged. Engineers traveled, knowledge transferred. The relationship was never loud. It was never meant to be. It functioned precisely because it stayed below the surface. But something has changed. Kim Jong Un brought it above the surface himself. To fully grasp what this moment represents, one must travel back, not years, but decades. The timing of this decision is not accidental. Nothing in geopolitics ever is. In the months leading up to this statement, Kim had already been sending a different kind of message to the world. He had made a series of announcements about North Korea's military capabilities, each one more direct than the last. He spoke openly about his country's willingness to challenge Western influence on a global scale. He positioned North Korea not as a nation simply trying to survive, but as a nation ready to shape outcomes. Analysts who study his communication patterns noted the shift. When a leader like Kim moves from defensive posturing to active alignment, it marks a transition. It means the calculus has changed. It means he sees an opportunity, or a necessity, that was not visible before. By publicly backing Iran at this particular moment, Kim is doing several things at once. He is telling Tehran that Pyongyang is a serious partner, not merely a sympathetic observer. He is telling Washington that any pressure campaign against Iran now carries an additional variable. And he is telling the rest of the world that the architecture of global opposition to Western military dominance is no longer a whispered conversation. It is an open declaration. For the business community, this is where the analysis must become practical. Statements between leaders of sanctioned nations might seem distant from the daily concerns of entrepreneurs and investors, but history has shown repeatedly that the moments which feel distant are often the moments that matter most. The connections between geopolitical alignment and economic consequence are not theoretical, they are structural. When two nations with parallel sanctions evasion networks deepen their cooperation, the flow of goods, technology, and capital shifts. When that cooperation carries military dimensions, the risk profile of entire regions changes. Energy supply chains become less predictable. Insurance premiums on international shipping routes rise. Defense budgets expand. Capital moves toward safety. These are not dramatic possibilities. They are documented patterns. Kim Jong Un's statement, on the surface, is a declaration of political solidarity. But beneath the surface, it is something the business world cannot afford to ignore. It is the formalization of an alliance that was already operating, now operating without apology, without concealment, and without any clear mechanism for the West to stop it. The signal has been sent. There's a particular kind of alliance that world powers fear most. Not the alliances that are announced at summits, not the partnerships signed in front of cameras with handshakes and flags. Those alliances are visible. They can be monitored, pressured, and, if necessary, disrupted. The alliances that truly unsettle the global order are the ones that were never supposed to be seen at all, the ones that were built quietly, methodically, over years, in the spaces between official records and international oversight. The North Korea and Iran relationship is precisely that kind of alliance, and Kim Jong Un just pulled back the curtain on it himself. To fully grasp what this moment represents, one must travel back. Not years, but decades. The foundation of this partnership was not built on ideology alone. It was built on necessity. Two nations, each facing the full weight of Western economic pressure, each cut off from the conventional financial systems that most countries depend on, found each other in the margins. And in those margins, they built something remarkably durable. It began, as most things between these two nations do, with technology. North Korean missile expertise found its way to Iranian defense programs through channels that operated far outside normal trade routes. Engineers did not travel through airports with declared purposes. Equipment did not move through ports with accurate manifests. The system that was built to track the movement of sensitive technology across borders was, quite simply, not designed to catch what these two nations were doing. They were not breaking the rules of the system. They were operating in the gaps the system had not closed. Over time, the relationship matured beyond technology transfers. What emerged was something more sophisticated, a parallel infrastructure. Shadow banking arrangements that allowed value to move between the two economies without touching the dollar-denominated financial system that Western sanctions are designed to weaponize. Barter arrangements that eliminated the need for traceable currency transactions entirely. Third-party intermediaries, businesses, brokers, and middlemen operating in jurisdictions with limited oversight, who facilitated exchanges that would never appear in any official ledger. This is not speculation. Intelligence agencies in the United States, Israel, and Europe have documented pieces of this architecture for years. The problem was never lack of awareness. The problem was the structural impossibility of dismantling a system that, by design, left almost no trackable footprint. What Western governments built was a sanctions regime optimized for nations that participate in the global financial system. North Korea and Iran, by necessity, had largely stopped participating in that system. They had built their own. Now consider what happens when that invisible infrastructure becomes the backbone of a publicly declared alliance. The declaration Kim Jong Un made does not create new cooperation between Pyongyang and Tehran. The cooperation already exists. What the declaration does is something far more consequential. It signals that both nations have reached a level of confidence in their relationship that they no longer feel the need to conceal it. The confidence does not emerge from nowhere. It emerges from a foundation that has already been tested, refined, and proven to function under pressure. For Western policymakers, this creates a problem with no clean solution. The standard tools of diplomatic pressure, sanctions, isolation, financial restrictions, have already been applied to both nations at maximum intensity. There is no additional economic lever left to pull that has not already been pulled. The alliance they are now confronting publicly is one that was forged precisely in the crucible of those maximum pressure campaigns. For the business community, the implications of this architecture extend well beyond politics. When two economies build parallel trade and financial systems outside Western oversight, they create alternative corridors through which goods, capital, and technology can move without interacting with the systems that most international businesses rely on for stability and predictability. As those corridors deepen and formalize, they introduce structural uncertainty into supply chains, commodity markets, and energy flows. The dual front challenge now facing Washington is not simply military. It is economic. It is logistical. It is a question of how much complexity the existing global order can absorb before businesses, not governments, begin to feel the weight of it directly. North Korea and Iran did not build this alliance to make headlines. They built it to endure. And now that it is in the open, the question is no longer whether it exists. The question is how far it will go. There's a moment in every major geopolitical shift when the conversation stops being about politics and starts being about money. That moment has arrived. What began as a declaration of solidarity between two sanctioned nations has now entered territory that every serious investor, business owner, and economic decision maker must confront directly. Because when security challenges multiply across different regions simultaneously, when the world is no longer dealing with one crisis, but two, three, or more at the same time, the financial consequences do not add up linearly. They compound. And compounding consequences, in economic terms, are the most dangerous kind. To understand what is now at stake, one must first understand a concept that military strategists call resource overextension. It is not a complicated idea. It simply means that every government, every military, and every diplomatic apparatus has a finite capacity. They can manage a certain number of crises simultaneously before the quality of their response begins to deteriorate, before decisions get made under pressure that would not have been made under normal conditions, before the cracks in the system become visible to the people watching from the outside. The United States and its Western allies are already operating under significant strain in the Middle East. The conflict involving Iran has consumed diplomatic bandwidth, military positioning, and financial resources at a pace that was not anticipated when the current cycle of tensions began. Intelligence resources have been redirected, naval assets have been repositioned, diplomatic channels that once focused on trade and economic coordination are now consumed with security conversations. Into that already strained environment, Kim Jong Un has now introduced a second front. Not a military front, not yet, but a strategic front. A front that forces Western planners to divide their attention, their resources, and their contingency planning across two volatile regions at the same time. And divided attention in geopolitics creates exactly the kind of gaps that adversaries are trained to exploit. Now consider the geography. The Strait of Hormuz is one of the most consequential pieces of water on the planet. Approximately 20% of the world's oil supply passes through that narrow corridor every single day. It is the artery through which energy flows from the Persian Gulf to the economies of Europe, Asia, and beyond, and it sits at the center of the region where Iran operates with the most leverage. If the conflict expands, if Iranian decision-makers, emboldened by the public backing of a nuclear-armed partner, choose to apply pressure at that choke point, the consequences for global energy markets would be immediate and severe. Oil prices would not rise gradually, they would spike, and oil price spikes of sufficient magnitude do not stay contained to the energy sector. They travel into transportation costs, into manufacturing inputs, into food prices, into the inflation calculations that central banks are already struggling to manage, into the profit margins of businesses that have no direct exposure to the Middle East, but are deeply exposed to the cost structures that Middle Eastern energy prices determine. This is where gold and silver enter the conversation, and where serious investors have already begun paying attention. History is not ambiguous on this point. During every major period of multi-front geopolitical tension in the modern era, hard assets have performed a specific and consistent function. They have absorbed the capital of investors and institutions who no longer trusted the stability of paper systems. Not because gold and silver solve geopolitical problems, they do not, but because they exist outside the financial infrastructure that geopolitical crises tend to damage most. When the conflict in the Middle East escalated in previous cycles, gold moved. When the Cold War produced moments of genuine multi-front tension, gold moved. When sanctions regimes created uncertainty in global currency markets, gold moved. The pattern is not a coincidence, it is a structural response. The market's way of acknowledging that certain risks cannot be hedged through conventional instruments. What is different today is the scale of the uncertainty. It is not one region. It is not one alliance. It is a publicly declared partnership between two nuclear-capable states operating a parallel financial infrastructure at a moment when Western diplomatic tools have already reached their limit. Institutional investors and sovereign wealth funds do not need a formal announcement to begin repositioning. They read the architecture of risk. And the architecture right now is signaling something they have not seen in a very long time. For entrepreneurs and business leaders, the practical implications deserve direct attention. Businesses with international supply chains that pass through or near the Persian Gulf region are now operating in an environment where disruption is no longer a tail risk. It is a planning variable. Shipping insurance costs on affected routes have already begun reflecting elevated risk premiums. Energy-intensive businesses are facing input cost uncertainty that standard forecasting models were not built to accommodate. Beyond the immediate operational concerns, there's a broader strategic question that every serious business leader must ask. When the global order that underpins predictable trade, stable currency exchange, and reliable contract enforcement comes under simultaneous pressure from multiple directions, what does the contingency plan look like? The businesses that will emerge from this period in the strongest position are not the ones that reacted fastest when the crisis became undeniable. They are the ones that recognized the architecture of risk while it was still being constructed. The multi-front crisis is no longer a forecast, it is already taking shape. And the market consequences, quiet for now, visible only to those paying close attention, will not remain quiet for long. There's a difference between a crisis that surprises the world and a crisis that the world watched build and chose not to prepare for. This is the second kind. Every element of what is now unfolding between North Korea, Iran, and the broader Western-led global order has been visible to those willing to look. The alliance was not hidden. The sanctions evasion infrastructure was not secret. The military cooperation was documented. The signals were sent repeatedly by leaders who were not trying to conceal their intentions. They were simply counting on the fact that most of the world would not take those intentions seriously until it was too late to respond comfortably. That window, the window between early awareness and forced reaction, is closing. And what serious people do in the next 12 months will define their position for the decade that follows. 3 realistic scenarios now exist for how this alliance develops, and each one carries distinct consequences for markets, businesses, and the global economic order. The first scenario is controlled escalation. In this trajectory, North Korea's support for Iran remains largely declaratory. Kim continues to make public statements of solidarity and quiet cooperation. In defense, technology deepens further, but no direct military intervention occurs. The effect on Western strategy is primarily psychological and diplomatic. Iran operates with greater confidence, knowing it has a partner that complicates any Western calculus. Markets in this scenario experience elevated volatility but no catastrophic disruption. Gold and hard assets trade at persistent premiums. Energy prices remain elevated but manageable. Businesses adapt through incremental risk adjustments. The second scenario is active material support. In this trajectory, North Korean assistance moves beyond statements into tangible military and technological transfers, missiles, guidance systems, electronic warfare capabilities that meaningfully alter Iran's operational capacity in the region. Western intelligence agencies detect the transfers, but lack the mechanisms to stop them without risking direct confrontation with Pyongyang. In this scenario, the Strait of Hormuz becomes a genuine flashpoint. Oil markets experience severe disruption. Gold moves aggressively. The dollar faces pressure as alternative settlement systems, already being developed by sanctioned economies, gain credibility among nations watching from the sidelines. The third scenario is the most consequential and the least discussed. It is the scenario in which the NK-Iran alignment becomes the visible centerpiece of a broader coalition, one that draws in additional actors who have been quietly observing whether the Western-led order can be effectively challenged. In this trajectory, the dual-front crisis becomes a multi-front crisis in the fullest sense. Diplomatic resources collapse under the weight of simultaneous demands. Military positioning in the Pacific, the Middle East, and potentially Eastern Europe creates compounding pressure that no single alliance can manage cleanly. Markets, in this scenario, do not experience volatility. They experience restructuring, a fundamental repricing of risk across asset classes, geographies, and currencies. Each of these scenarios shares one common feature. The window for comfortable preparation narrows as each one progresses. For Western governments, the strategic problem is now almost entirely structural. The tools that were designed to manage rogue state behavior, sanctions, diplomatic isolation, financial exclusion, were built for a world in which those states remained isolated from each other. That world no longer exists. North Korea and Iran have not merely survived the pressure of those tools. They have used that pressure as the raw material for building an alternative architecture, one that functions independently of the systems Western governments control. This is not a failure of intelligence. Western agencies knew what was being built. It is a failure of strategic imagination. The assumption that maximum pressure, applied consistently, would eventually produce compliance rather than adaptation. Kim Jong Un's public declaration is the moment that adaptation became undeniable. For the business community, the forecast resolves into 3 non-negotiable priorities. The first is supply chain stress testing. Any business with exposure to energy costs, Persian Gulf shipping routes, or Asian manufacturing corridors must now treat disruption not as a remote possibility, but as a scenario requiring an operational response plan. The businesses that have already modeled alternative sourcing, alternative logistics, and alternative payment mechanisms are not being paranoid. They are being precise. The second priority is asset positioning. The historical pattern is clear and consistent. During periods of multipolar geopolitical conflict, capital moves toward assets that exist outside the financial infrastructure under pressure. Gold has performed this function across centuries and across civilizations, not because it is fashionable, but because it is structurally independent of the systems that crises damage most. Serious portfolios are already reflecting this reality. The question for every business leader is whether theirs does. The third priority is informational discipline. In periods of elevated geopolitical uncertainty, the volume of noise increases dramatically. Analysts make predictions. Media cycles amplify the most dramatic interpretations. Governments issue statements designed to manage perception rather than reflect reality. The business leaders and investors who navigate these periods most effectively are not the ones who consume the most information. They are the ones who have learned to distinguish between signal and noise, and who act on signal before the noise makes action feel urgent rather than strategic. Kim Jong Un did not break the internet with his Iran statement by accident. He said what he said when he said it because the moment was calculated, because the alliance was ready to be seen, because the infrastructure was in place, and because the message was not really directed at the public at all. It was directed at Washington, at Brussels, at every government and institution that had spent years assuming that maximum pressure would hold the line. It did not hold the line, and what comes next will not be shaped by the leaders who issued the pressure. It will be shaped by the businesses, the investors, and the individuals who understood, early enough to act, that the world they were planning for had already begun to change. The signal has been sent. The architecture is in place. The question that remains is the only question that has ever mattered in moments like this one. Who was paying attention?